Hi everyone, it's my pleasure in this video to be able to welcome one of the leading US crypto accounting companies around in Crypto Tax Audit, who'll be answering some questions on US crypto tax for us. And in this video, we'll be speaking with the founder of Crypto Tax Audit, Clinton Donnelly, a very qualified and experienced crypto accountant who's actually written 6 books on US tax reporting and is a leader in the US crypto tax space, having appeared in the media several times. And in this video, I'll be asking Clinton some questions about crypto tax in the US. So please do add any questions you may have about US crypto tax in the comments below, and we'll do our best to answer them. If you know that you're interested in specific crypto tax advice based on your personal circumstances, and you're a US citizen, even if you're not in the United States, I've included a link in the description to an inquiry form where you can contact Crypto Tax Audit directly to book in a free consultation. And you just need to make sure that coin knowledge was added in the "How did you hear about us" box, just so they know where you've come from. So please do like the video and subscribe to the channel so I can continue to offer more content for you in future. If you follow our social media channels on X, Facebook and Instagram, you'll receive daily crypto and financial education news update posts, which will keep you informed. Stick around to the end of this video to find out what services Coin Knowledge offers. Just a quick reminder that nothing contained here is financial advice, and let's jump straight in. Let's come back to like an individual investor then. So let's say an individual investor wants to kind of get their taxes done by you, the crypto tax audit. In an ideal world, what would be the best kind of client coming to you in terms of the records they've got, or what would you want to see from a client?
You know, assuming that, as I talked about before, they have the type of sales volume that would warrant having us do their work. We'll take you the way you are. It can be ugly. I've had people call up and say, there's no way you can do it. We can't reconstruct it. I've lost too many records. Exchanges closed down. I lost wallet accesses. I've been, hit BTC, closed me out because I'm American. No problem. We get it done. That's the bottom line. We just simply get it done. If you've had major losses from the Ponzi scams or other types of scams, we get it done. We figure out how to claim the maximum discount on that. People call us up and say, how can you figure this out? It's like, you know what, you're not the first person we've done it for. We are the best in the industry, and we're getting fairly wide recognition. Anyone that's got a complex situation, that we're the ones that get it done. I mean, if people are coming to us because they've realized they're getting audited, and they come to us because we are able to. We have forensic accountants. We document how we do everything, and we know how to attack the IRS when they do their calculation, because they're even less skilled, far less skilled than we are in doing gain calculations. So they become a very easy target for us to attack.
Yeah, I wasn't going to ask if I fit into the ugly category that you mentioned.
Yeah, we have some ugly clients. A lot of these are DeFi traders, to be honest with you. They get very enthused. They might use a bot, and they're doing a gazillion different types of trades. They're using obscure blockchains or blockchains that their blockchain explorer doesn't really pull adequate information from. You get ugly if you're doing a lot of bridging between chains, high volume of transactions. We've had clients with 5 million transactions in a year. We've had clients with 75 active DeFi wallets. We had to go in and pull those apart. When you're looking at DeFi, if you're doing your own gain calculation, these online services will say, well, just give us your wallet, we'll pull the transactions off. Not that it falls short because you can see the transactions, you can pull them off, but these services have no idea what's happening. They can't read the smart contract, and they might recognize a handful of them, but the vast majority of them, they just simply can't read what's going on in the smart contract. And we've worked with all the firms. Firms come to us, they're willing to pay us to take their software through the paces in terms of reading blockchains and reading smart contracts. And it's just a universal problem. Maybe somebody's looking, I don't know if anyone is doing artificial intelligence analysis of smart contract for the purpose of the tax calculation. But even once you analyze it, some of these smart contracts are doing such incredible things like liquidity pools. You're balancing different things or rebasing tokens. So many different things coming in, and each country would handle that differently from a tax point of view. It's just complicated, but we know how to cut through that. A lot of times there's shortcuts that we can take that get us to the exact tax number that we want to report. Most of my forensic accounting team has been working for me for over 4 years. So they're polished senior experts. I'm just impressed by the quality. We rarely have anyone who leaves our company after they've passed the qualification stage. We have loyal employees, and we keep them happy, we pay them well, and they do great work, and we demand high standards, and our clients tell us just how happy they are with them.
Yeah, that's amazing. And I'd love to in future videos maybe touch on the more complex areas, because I think that would be interesting for the levels that we're talking about here, in terms of like even to like mining, the tax on mining and airdrops and all of that kind of stuff we can get into.
I can do those. Yeah, I mean, airdrops are different with the UK. And airdrops in the US are treated as its value in US dollars, the fair market value on the day it's received. So that's how we look at it. I know I've talked to some other people in the UK, and they've said it can be more complex in terms of when that revenue recognition occurs. But in the US, the IRS's position is once you get it, that's revenue. Now, we take the subtlety there is fair market value. Sometimes you get a coin on like day one and it's outrageously priced, and within a week, the price has collapsed by 90%. To us, that's the fair market action pricing mechanism. And so we would look at those. And even though the, say, coin market cap would say that token was at the high price, we would look at it and say, well, no, that's not the high price. That's not the fair market value. We would break it down. With staking rewards, the same thing is true. The subtlety comes into what we call in the US constructive receipt. And constructive receipt means you may not have possession of it, but if it's a small matter for you to take possession of it, then you have constructively received it. When you don't have constructive receipt, if it's not a small matter to get it. And with staking rewards, quite frequently, staking rewards have these periods or epochs or whatever the terminology you have to use in terms of when the awards are issued. And if you ever you can't actually receive into your own possession the staking rewards until you close out of your validator relationship. And when you do that, you're going to miss an epoch, right? Because even if you reinvested right away, you're going to miss that epoch. Therefore, or maybe a couple epochs. Therefore, you can't say that you're constructively received it, because those coins are theirs. Yeah, they will be yours, but you can't take it without losing money. So it's not constructively received. Well, the IRS, it's beyond them to figure that out online. So we just make those calls for people.
Yeah. What's the tax in staking? What's the tax that you pay?
The tax on staking and on airdrops is treated as ordinary income. Ordinary income is taxed at your marginal tax bracket, which would be, it ranges from, for most people, that's 24 to 35, 37%.
Yeah, it's similar in the UK then. Is it the same with crypto lending? I'll stop badgering you with questions.
No, go ahead. Lending is not considered income. You have not, just because you have received some money from an institution doesn't mean that that's income, right? Because you have to pay it back. All right. Even if you put up collateral and then you got money back, you still have to pay it back. Therefore, it's not income. So when you do pay it back, and you have to pay it back with interest, the interest is not an investment expense. That's just your choice. And paying it back is not a investment reduction either. If your collateral that you put forward gets the price drops and you get I forget what the term is, but you get closed out of your loan or your collateral situation, then that's a forced sale, and it would basically be treated as though it was sold at that price, low as it may be. And then the loan dollar amount, that instantly, if it becomes yours, well, see, typically it depends on how each company is different, but if they force a liquidation on your assets, they're going to use that liquidation to pay off the borrowed amount, and then you keep what's left over. But basically, you're going to be taxed on the liquidation price, or not taxed, but that would be treated as the proceeds amount, and you subtract from it whatever you paid for it. as capital gains. Hope I didn't confuse you on that.
Yeah, that was quite complex. We might need to come back to that now.
Sorry about that.
I think in the UK, I know that I was speaking to Jamie a while back about it from Minor, and it's all about the ownership. So if you're entering into a crypto lending agreement, it's all about whether you, as part of the smart contract, still hold ownership of that cryptocurrency as to what happens. But I think we ended up with, in most cases, it's not taxable.
You own, in US, we look at that as when you are given a lent amount, you own it, all right? You also own the debt to pay it back. So there's two dimensions there. And that debt agreement that's set up on the smart contract, when a liquidation event occurs, then the lender automatically pays off the obligation of the debt from the collateral amount. Hope that was a little more succinct.
Beneficial ownership.
Yeah,
is what I was looking at. Yeah,
exactly.
Yeah.
But taxation, the airdrop rules are different from the UK than the US. I will say that. Okay, so anyone who's thinking those things should be aware of that. I would say they're simpler in the US.
Yeah, no, I'd agree. I think that's my fault being from the UK. I'm confusing everybody by just talking about the UK, so apologies about that. Let's end with the final question, if that's right, Clinton, which is, what's your most interesting or complex client, without obviously naming names or giving away anything, but what would you say has been the most interesting or complex client that you've had to deal with?
Most interesting clients are really the super high frequency traders, because whatever they're doing thousands of them. We had one client who used multiple accounts, and each account he was doing in the neighborhood of, these are bot trading guys that are doing 5,000, in his case, it was several million on each one of the accounts. And he continued to do this. He was also a resident he was a U.S. citizen resident in a European country. So we did the gain calculation because we're the experts on it. We worked with his law firm in the foreign country in Europe, and he had to work out the tax situation. The tax situation in his country was really a staggering amount. It was like 50% or something like that. And so gain calculation when you're being taxed that amount, you really want an exact gain calculation.
Yeah.
Because basically 50% of every excess dollar you make is being taxed. So we looked at that. And then there are also certain gaps in this country. I think it was Austria. The gaps in how they look at gain versus how the U.S. looks at gain. So we had to do the U.S. gain calculation, and then we had to identify the gap differences and subtract those out, which gave him a benefit. And then to represent that as a number that we could defend with the law firm in Austria going forward. So we have the ability to do the gain calculation for any country of the world. We look at their gain calculation rules, and we have the in-house forensic accountants that leverage tools to get you to the number that you can defend. So, we have clients in Japan and Australia, China, Russia, all over Europe, as you can imagine, a lot of them in Dubai and Saudi Arabia, Puerto Rico, all over the U.S. primarily, but our clients are all over. A lot of the biggest clients are outside the U.S., honestly, because they're just more out of the box thinkers to begin with, I think.
Yeah, that's really interesting. I think that's why you do what you do, and I do what I do.
People call me up and they say, how do I get taxed in your country and the U.S.? I go holding the U.S. tax code in my head is painful enough, let alone another country's tax code, right? But we are pretty good. I have I had an advanced law degree, and we did a lot of international taxation, so we can handle it. I will say this for anyone listening, is that the tax regime in the U.S. is under significant flux. A lot of things changing because of the Trump administration coming in. There's, in many regards, a revolution happening in terms of governance in the U.S. and also in terms of how the U.S. funds its country and how it looks at expense. And we're looking in the U.S. at radical reduction in expense by eliminating waste. They're also looking at just completely changing, if you will, the business model of the U.S. government. If the Trump administration is successful at doing this over the next 2 years, and it is a big experiment, if they are successful, it could have a radical effect on the rest of the world. And he is having a radical effect also on international regulatory bodies such as the OECD, which has spent several years trying to enforce a variety of income management strategies between countries, and one of them being forcing a minimum corporate tax of 15%. Well, Trump has already said, no, we ain't doing that. I think Trump is looking at going way below 15%. He's also setting up trial balloons, if you will, of possibly significantly reducing or even eliminating U.S. taxation altogether. And that would be radical and have significant ripples across the rest of the world, particularly in Europe, where they depend on a heavy high income tax strategy, and they have a high VAT tax strategy. So, this is a very turbulent times. Taxes, it may be scary. To some people, it's boring, but it is revolutionary what's about to happen in the tax world if things continue as they're going.
Yeah, I think that's really interesting. I think that's a great way to end. And that's why I'd just like to say thank you, because to have someone that's keeping abreast of all of these things and educating people and giving up your time to be on the channel this evening like you have, I think it's just a really big thank you from me, and a thank you from the viewers as well, Clinton.
Well, it's very stimulating talking with you, James. Anytime, look forward to working with you. And if any of your clients have a question about U.S. taxes, go to Crypto Tax Audit.
So that ends this video on US crypto tax, and hopefully that's helped. But do keep an eye out for other videos in this series where I continue to ask more questions. It certainly is a bit of a minefield and quite stressful trying to work out your crypto taxes, especially if you've made quite a lot of transactions over a period of time. So having someone there who's qualified, experienced, and knowledgeable in the field can save you a lot of time and potentially money. And I'd like to thank Crypto Tax Audit for giving up their time and sharing their expertise here. And if you are interested in getting specific crypto tax advice with Crypto Tax Audit, then you can contact them directly using the link in the description to this video, which will take you to an online inquiry form. And you just need to make sure that coin knowledge was added in the How Did You Hear About Us box, just so they know where you've come from. And a great starting point is also Coinly, one of the largest and best automated crypto tax software out there. They also did a video on that you can find the link to here and in the description. And there's a link to sign up for a free Coinly account in the description to this video. If you have any other questions about crypto tax, please do add them in the comments to this video and we'll do our best to answer them in a future video. And if you're interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. I've also included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5 that I did a video on recently that you can find the link to here and in the description. And finally, if you're looking for a portfolio tracker for your crypto portfolio, then I've included a link to CoinStats in the description to this video, which is the leading crypto and Bitcoin tracker on the market. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.